The Stock Market Trading Video Course, Part 5. Risk Management. Okay, so in this section, we're going to talk all about risk management, the way to kind of control risk, and this is probably one of the more important parts about trading. Doesn't matter if you're trading stocks, options, futures, but the risk management side of it is very, very important. The first thing that we're going to talk about is a trade plan. Okay, what exactly is a trade plan? Pretty much a trade plan is a plan of attack, okay? A plan of where am I going to enter the trade, okay? Where are my targets going to be and where are my stop losses going to be? One of the most important things is to be able to trade without stress, okay, without having to worry about panicking or anything like that. When you actually set up a plan and you say, I'm going to enter here. If price gets here, that's my target. I'm going to sell. If price reaches this point, and that's where I'm going to take my stop loss. I'm going to have the willingness to accept my losses. I'm not going to move the stock loss and kind of go, oh, well, what if this happens or what if that happens? All it takes is one bad trade to really wipe out your account. And with the trade plan, you're not going to have to worry about stressing out, because before you enter, you know exactly how much you're going to trade. Okay, you know exactly how many shares. You should know exactly how much you're risking and how much you're going to make on the trade. So one of the things that I personally do is I always have, when I trade the E-mini S&Ps, I look for prior support resistance levels, and maybe I'll say, okay, hey, I either want to be right or right out of this trade, right? So maybe I'll give myself a 2-point stop loss. When I trade the E-mini futures, right? Every point is $50. Now, if I'm trading Apple, okay, maybe I go, hey, I want to give myself a 25-cent stop loss. Kind of give it a little room, but I believe price is going to bounce right around the support level. Maybe it's a pivot point. Okay, for example, let's say I'm going to trade Apple and the pivot point is at 105.25. Okay, what I might do is I might say, okay, I'm going to enter the trade a couple pennies above, right? In case I'm going to try and front run because I want to make sure I get a fill. So I'm going to risk maybe $50 on this trade, right? So I know, okay, I'm going to have a stop loss of 25 cents. My entry is going to be, we'll say 105.30. Okay? At 105.30, my stop loss is going to be 25 cents below that, which would be 105.05. Because the pivot point is at 105.25. If it starts to go much below that, I'm wrong, right? I'm dead wrong on the trade. Get me out, and I'll look for the next trade setup. Well, every 100 shares, because it's 25 cents, right, per share, times 100 shares would be $100, right? Or sorry, $25. So what I'll do is I'll look to buy 200 shares, and I know that's going to give me a $50 risk on the trade. Okay? Now, with that $50, what's my reward going to be? Maybe I want a 1-to-1 risk reward, right? Maybe I want a 1-to-2 risk 1, win 2. Maybe I want a risk 1, win 3. Now think about it. If I risk 1 to win 1, I could have be 50% right, 50% wrong, okay? And I'm getting break even. If I win 70% of all my trades, I'm going to be ahead. Now, what if I risk 1 to win 2 on every trade? That's going to increase my odds, right, of making money. Now, if I have a 50% chance, or I'm sorry, if I win 50% of all my trades where I risk 1 to win 2, I'm actually going to be positive because the winning 2, okay, so now I'm risking $50, we'll say, on the Apple trade to make 100. Well, if I win 5, let's say I take a total of 10 trades. Okay, I'm risking 50 to make 100 on 10 separate trades. Well, if I win on 5 of those trades, I'm going to win $500. If I lose on 5 of those trades, I'm going to lose $250. So net, I'm going to make $250 worth of profit. Okay, and I have a 50-50 percentage of winning, right? Or winning trades. But you also have to be correct by 2 times, right? Whatever you're risking, it has to move that 2 times. So just to kind of understand that, and then risk 1 to win 3. Again, it's a lot harder as you start to risk less and win more because you have to hit the bottom and you have to be looking for that big bounce, right? So if I'm risking 25 cents, I need to win 75 cents. Well, maybe it'll get up to 45 cents, okay? And then soon turn around and start to pull back. Now, one way of trading these things to control your risk, right? And to maybe alter different things is if you're risking 1 to win 2 and you're up 25, we'll say you're up 25 cents, right? So you buy in at 105.30, price goes to 105.55. Okay, now you're up $25 on the trade. Maybe 25 cents. Maybe you move your stop loss to break even. Maybe you take 100 shares off and lock in a $25 winner, right? And move the other 100 shares to break even. Now, no matter what happens, you have a winning trade. They can't take that away from you. You're playing with the house's money. So one of the things that it comes down to is with the risk reward, there's many different ways to trade the risk reward side of it. But with that is, I would say, play around with it. One of the ways I like to do it is I like to risk 1 to win 1 on trades where I'm like, okay, hey, I kind of like this trade. Now, there are going to be trades where I think we're going to really have a big bounce, okay? So maybe I'll risk 1 to win 2 or win 3, okay? I think it comes down to being observant of the market. Are we at a low point? Are we potentially a swing low where the market could really bounce, right? Could Apple really start to rally at this level? Do you believe this is a major support level? Okay, if you do, maybe you look for the bigger wins. If you're just looking for a trade, hey, I think a price will bounce. We're at a pivot point, but I don't know how far we're going to bounce. Maybe you risk 1 to make 1. So these are all ideas of the way to manage your risk. The other part to the trade plan is stick with your trade plan. Write down what your trade plan is. Write down, I will never ever move my stop loss. If it's coming down to it, I'll move it even lower. Okay, we never know where stocks can go. And also, never think you're smarter than the market, because the market will teach you a lesson and it will punish you. Okay? The other thing is always have the willingness to accept losses. I mentor and teach a lot of traders, and one of the biggest problems they have is they always want to move their stop losses, or they don't have the willingness to accept their losses and being wrong. Okay? Have the willingness to accept your loss. preserve your trading capital. Know that the market's like a river of trades. There's always another trade that's going to come down that river. It's not the last trade you'll ever be able to make, okay? And if you take your stop loss, if you don't, you potentially could be buying a stock and that stock may never ever come back to this level again. I've watched stocks go from 150 all the way down to bankruptcy. And these are stocks that you would never think in a million years would go bankrupt, okay? They do. Always have the willingness to accept your loss. Also, trade to trade well. Don't try and trade to make the money side of it and think about the money. Just trade. Am I doing this trade? Are all my signals? Is everything I've learned from my price action, watching the market in this stock trading market video course, okay? Is everything that I've learned from here setting up and telling me this is a good trade? If it is, then take the trade. So, again, that's kind of one of the things with the risk plan, your trade plan. And always have a plan every time you get into a trade. So I just want to say thank you very much for watching this video course on the stock market. And remember to always trade without fear. Okay, and you can learn more at daytradingfearless.com. I would definitely say check out our psychology, my psychology video I did on trading psychology. It's a great video. It's about an hour long. It's just all about getting your mind in the right place of being able to trade the market and different ways to actually perceive the market. The markets are all about perception. You might think a stock's bullish. Well, I might look at the same chart and think it's bearish. It's all about perception, but it's also about risk management. It's about understanding the market, the technical side of it, or the fundamental, what you're dealing with, okay? But with the trading psychology video, it's a great video just to kind of see the market in a way you never thought you might actually look at the market, and take everything you've learned from this, all the different trading strategies, and go out to the marketplace and use them. And I hope you enjoy them. If you ever have any questions, please feel free to give me an email. Shoot me an email at jason@daytradingfearless.com, and I'll respond with back to you within 24 hours. And also, don't forget, I also do coaching and mentoring one-on-one. So if you're looking to kind of get a little more one-on-one help, hey, I need more education, I need somebody to kind of walk me through, teach me the lingo, kind of dive deeper into learning the market, again, send me an email, jason@daytradingfearless.com, and we'll chat. I'll sit with you for 15, 20, 25, 30 minutes, and we'll talk and see if I'm a good fit for you. But again, thank you very much, and enjoy, thank you for enjoying these videos.